Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW SYS 008 traders, and our website is www.stochastic-magdi.com. For all trade, we use the 5% money management rules and apply stop loss in all trades. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It is primarily for the TSTW traders. The title of this video is the formation of a bullish Gartley pattern. The formation of a bullish Gartley pattern. We want to discuss, the anatomy of a Gartley pattern, all right, how the pattern is formed, and understand the pattern so we can use the pattern like the professional traders, all right. But we will discuss a bullish Gartley pattern when we want to buy using, the Gartley pattern. There are various ratios, Fibonacci ratios, that we will pay attention to when we are talking about Fibonacci pattern, in this case a Gartley pattern. And the first Fibonacci ratio that we will talk about is the 61.8% Fibonacci retracement level. When we are talking about a Gartley pattern, the first Fibonacci ratio that comes into our mind is the 61.8% Fibonacci retracement level. I want to show you the guidelines that we must follow when we are trading the bullish Gartley pattern. All right. I have some drawing on my chart here. So the first thing I want trader to remember is the letter M. M for Mike. So you see here I draw letter M. And you can see the two tops of the M are not at the same level. Normally when we are drawing the letter M, we draw it like this. M for Mike, should be equal high, But for Gartley pattern, I want you to remember the letter M with a lower high. That's what you need to remember. So the first thing that you need to keep in your mind all the time when you are talking about Gartley pattern is the ratio of 61.8. The next thing is the letter M, M for Mike, with a lower high like this, as I've drawn it on the chart here where my cursor is, These two things, do not forget them. The third thing that you need to understand is that if you are looking for a bullish Gartley pattern, a bullish pattern will appear, remember this, a bullish pattern will appear at the end of a downtrend or during a bullish trend. If you get that one right, this is about the market stable data. If you remember that, you will not misuse, the bullish Gartley pattern. A bullish pattern, a bullish price structure will appear at the end of a downtrend or during, a bullish trend. For the bullish Gartley pattern, we want to see an initial bearish move. So the pattern will appear, this is very important, at the end of a downtrend. So you see here, the price went down from here to the red spot here. So a bullish Gartley pattern will often appear at the end of a downtrend. So we want to see initial move to the downside side. So apart from the ratio 61.8, the letter M with a lower high, you want to remember that the pattern must appear at the end of a downtrend. These are very important points. So we are talking about the anatomy of a Gartley pattern, a bullish Gartley pattern. So today we'll call this point the letter M, as I show you here. This is the Gartley pattern here. This point here, that's what we call X, X for X-ray. This point, that's what we call A for alpha. This letter here, this point here, we call it B for Bravo. This point here, we call it for C for Charlie. And this point here, we call it D for Delta. All right? So X, A, B, C, D. So in fact, A, B, C, D It's a pattern, but before that we have X, A, before A, B, C, D. All right? This is the Gartley pattern. The Fibonacci ratio. So you see here the price went on initial bearish move because the pattern will appear at the end of a downtrend. The SA will be a profit taking. This is X to A. X, A. After initial downtrend, because the patterns appear at the end of this downtrend, the SA is a profit taking. In normal condition, ladies and gentlemen, the SA should not cancel the initial downtrend. This is very important. Let me say this again. The SA is a profit taking. In normal condition, should not cancel the initial bearish move. So you can see here from here, there was a down move. Now we have SA, which is a profit taking. So this section of the bullish Gartley pattern, SA, is a profit taking of a prior bearish move, which is from here to here. We are looking at stock that we call Seagate Technology Holdings. It's listed on the Nasdaq 100. So SA is a profit taking. From here, where my cursor is, to this point, this is A, this is B. All right? A, B. All right? And it's from here to here. From here, this C, this is B to C. From here, this is C here to D. All right? So X, A, B, C, D. All right? X, A, B, C, D. All right? Now, the SA is a profit taking. Shouldn't cancel the prior move to the downside. All right? This is very important for us. Now, this is one condition. The second condition is that the A to B should be a retracement of 61.8% of the SA. Are you following me? The A to B should be 61.8% retracement of the XA. This is XA. The AB should come down, the AB should come down to the 61.8% of the SA. Okay, let me draw my Fibonacci tool here. I'm speaking slowly so you get a message. So this is X. We draw a Fibonacci to the A, right there. And I'm going to zoom into it. Hopefully we can see everything clearly in this chart. So this is XA. You can see the price went down to the 61.8. This is 61.8 Fibonacci retracement level. Right there. That's very important condition. This is a very important condition for the Gartley pattern, either bullish or bearish. So the AB should be 61.8% of the SA. But remember, the prior move, down move, is very important for us because the SA is a profit taking. AB should come down to the 61.8% Fibonacci retracement level of the SA. All right, let's move on. The B to C, which is this section here, the B to C, okay, is either 38.2% or even 88.6% of the AB. Let me say this again. The B to C can be, okay, either 38.2% of AB or even go up to the 88.6% of the AB. That's it. I'm not going to dwell on that anymore. So we know the condition for the AB in relation to the condition for BC in relation to AB. We also know the ratio between the AB in relation to SA. The ratio between the AB in relation to SA is 61.8, exactly 61.8. This is Gartley pattern. That's why I said to you at the beginning, the first ratio that you should not forget is what? 61.8. The second ratio is between 38.2%, either 38.2 or even up to, okay, between 38.2 and 88.6%. So that range, okay, that range, okay. So the ratio between the B to C can be between 38.2 up to 88.6%. Great. the last part is the C to D. The C to D for the Gartley pattern, the C to D, all right? The C to D should bring the price down, all right, to the zone of 78.6% of SA. So here you see this is SA here. The price went down and then went up. The first move down, that's the A to B. The move up is the B to C. But when the C to D is underway, it will bring the price down to the region of 78.6% of this initial profit taking here, which is SA. This is the theory. It's not difficult. It's very simple. That's why I simplify it to you, that you remember the letter M with lower high. So when you are looking at your chart, you are looking for something like this. Price went down and you see the letter M between the move down. That's what I want you to remember. So when you remember this, you will never forget that. Price went down and then you see the letter M like this between the price. Sometimes it's not very clear like this. You need to keep your eyes wide open, all right? With more experience, you detect them very easily. Sometimes it's not very clear as I draw it here. You need to watch it carefully, all right? The price sometimes you'll see you go down, okay? And then you will see the B to C will be very short like this. You may see sometimes, and you'll be wondering, where is it, okay? But with more experience, you will understand it, okay? Sometimes you see like this, okay? All right, so you want the price to go down first, and then you see profit taking, and then 1, 2, all right? Price went down, profit taking, and then 1, 2, 3. Price went down, profit taking, 1, 2, 3. That 1, 2, 3 is A, B, C, D. If you remember that, do not worry too much about the ratio. The only ratio you want to understand for a Gartley pattern is 61.8%. That's it. And the letter M, and like I'm showing you here, if you keep your eyes on the price, you will not miss it. Otherwise, you'll be going around checking Fibonacci. Just look for this pattern. Price went down, and the letter M like this between it, as you can see here. That's what we are looking for. All right. Once you see like the pattern like this, you're going to verify the ratio and know which pattern you are dealing with. And the key pattern is the 61.8% of the AB in relation to XA. Once we see that, there are other patterns that are similar to Gartley pattern. The first one is crab pattern. I don't want to confuse you now. I want to, stay on focus on the Gartley pattern, but you have to understand that the crab pattern also will retrace to 61.8. But when the price dropped to, when the AB went down to 61.8% of the XA, the first thing that is coming to our mind is the Gartley pattern. The second pattern that is coming to our mind is the crab pattern. All right, so here it is, 61.8. Now we don't start thinking of Gartley pattern. Okay, we start thinking of Gartley pattern after we see this pattern. Okay, after we see the whole pattern like this, down, profit taking 1, 2, 3. Then we start thinking of the pattern. Then we start thinking of Fibonacci pattern. Okay, so when we see here like this, we say, wow, this is a Gartley pattern, and we know which one it is. So we start verifying the ratio to understand which pattern it is. All right. So now the most important, the second important ratio is 78.6% of the XA. Remember, the C to D should bring the price down to the zone of 78.6% of XA, and the pattern is completed at the end of D for delta, right here. It's a buying zone. You can see the price, the market, the professional understood that, and they bought it. The pattern is completed here, right here. So the beginning of the pattern is the red one, okay, and the end is okay. If I move my spotlight here, yeah, the pattern has started here at the red spots and is completed right here at 78.6% Fibonacci retracement level of XA. You see the pattern is this one. Profit taking 1, 2, 3. All right. Profit taking 1, 2, 3. There was a down move. Profit taking 1, 2, 3. And then we verify. Once it's completed, once the pattern is completed, we don't want to start chasing and say it's going to be, it's going to be. All right. Once it's completed, we see it. Okay. It flashes into our mind. Say, well, let's verify what it is. And then we use the TSCWSY008 for swing trading at this point, okay? My voice is gone, my apologies to traders. All right. All right. It's not difficult, all right? So replay the video, okay, watch it, all right? Have any question, okay, contact us, and then we will, okay, get back to you, all right? So that's it. So this is the pattern. So if I draw my Fibonacci drawing tool, if I use my Fibonacci drawing tool here, by the way, the charting software that I'm using here, TC2000, excellent software, okay? So you can see that the A to B stop at 61.8, that's the line there. But below that, the price went down further, which is 78.6%. The horizontal line that you see now. If you like, we can draw them. Okay. So the A to B should bring the price in the zone of 61.8. That's the first horizontal line that I'm drawing on the chart. And you can see that the C to D brought the price to 78%, which is below it. Okay. All right, hold on, please. I'm going to zoom into the chart, and then I will bring it back, and you can see clearly on your chart. All right, hold on a second. Hold on a second. Okay, you see the two lines? Okay, the one here, I can color it now in turquoise. That's the 78.6% of the XA. This is a Gartley pattern, and the pattern is completed right here. All right, the pattern is completed here. We will look for opportunity to buy using the TSCWSY008. Okay, this is a setup. All right. Now we see the setup like this. Because we're on a monthly chart, we can be curious, go to the quarterly chart, see whether there's something else we need to pay attention to, validate the setup, and then now wait for the signal, go to the signal time frame, and then use the TST key 02 to enter the trade, all right? Or if you have any other valid top-down trading method, you would look for it at this point in time. This is the formation of, okay, a bullish Gartley pattern. Now, before you get too excited and looking for software that will dictate this bullish Gartley pattern, you will see also on the hourly chart, you can see on the 2-hour chart, you can see on any time frame, you can see on the 1-minute chart, you can see it on any time frame. But the key point I want traders to understand is this, all right? This is a bullish Gartley pattern. When we see a bullish Gartley pattern, we know where the pattern will be formed, either during a bullish trend or at the end of a downtrend. Okay? Now, the next thing, the price will not go up. The price will not go up if the fundamentals are not sound. So, talking about the individual financial instrument itself, Seagate, we'll go to Google Finance, Yahoo Finance, Bloomberg, okay? Do our diligence, check the balance sheet, check the cash flow. Are they making sell? The sell is the king. Are they selling? If they are not selling, if they are not making money, oh, wow. Why should we buy, okay? Are they coping with the competition, all right? Are they innovating, bringing, okay, more product that putting more pressure on their competitors? How much market share they got? Now we check also the current asset to the current liability, all right? Are they able to pay their short-term debt? Okay, looking into the future, all right? The earning yields, all right? Okay? And a return on capital. If the company is excellent stock, we should have a higher return on capital. Of course, all right? Efficient company, we have a higher return on capital compared to their peers. So, apart from the technical analysis, seeing a setup like this, all right, we will do our due diligence. Or you want to buy and hold in a normal stock portfolio, all right, which I recommend to traders, okay? It's up to you. I'm not a financial advisor. See a professional financial advisor. Okay, what you want to do? Okay, open with your bank a normal stock holding account with a dividend reinvestment plan. And at this point in time, you may decide to buy and hold because you don't want to be taken out the next day due to day traders or other crazy traders. All right. And you may decide to hold it for some years. All right. You may take, you see here 2011. You hold it for some years, all right? And the stock, okay, is going up. As the stock is going up, watch, okay, the resistance level. The price going up, the price looking for a better resistance level. So do not ignore it. You can see here, all right? When it came to the first resistance level, traders tried to sell it here. next level is this one here. In fact, it reaches and gap above it. All right. They don't want to wait anymore, and that's how it goes. You see, from one level, you see, it's a key level, and then to the next key level. Okay. Now trader slowly here, price still fighting to stay above it. There is a special trading tips that I can share with you now. Pay attention carefully. As the price, okay, we see the pattern is now completed. There was a down move. There was a profit taking that we labeled SA. S for S-ray, A for alpha, this point is X, this point is A. Then we see a pullback into the zone of 61.8% Fibonacci retracement level. This ratio, we do not want to forget it. Okay, the B to C can be between 38.2 and 88.6%, which means, all right, can go up more. But the C to D should bring the price into the zone of, all right, 78.6%. Some traders, they think that this kind of trading is like a magic or mathematical formula, and they go around, they say A plus A plus A plus A equal D, and 1 plus 1 plus 1 plus 1 plus 1 equal X, and they want to trade like a science. They are looking for, I mean, all right, some formula that will work non-stop, but human beings change their mind. Market can be messy, and you want to manage it and control it and be in charge of it, okay? All right, but at the end of the day, once the party is completed, we want to check the fundamentals, okay? And if we buy, the tips that I want to share with you before I forget is this one. As the price going up like this, traders will look for different level, okay, 61.8 or blah blah blah, Fibonacci extension level. As the price going up, I want you to remember this. If you forget anything else, the ultimate target is this one. The price, the initial move to the downside is this one. So there was a down move before the price went and displayed the Gartley pattern. Draw a vertical line from the starting point of the initial bearish move to the end of the bearish move. So the bearish move has started from here and ended here. We will draw a vertical line to highlight, okay, the height of that move to the downside. As the price going up like this and goes above, okay, the cycle point, this is the cycle point here. I don't want to talk about it. This is the cycle point here. We will project it. Watch the video that we titled Bullish Trade video, okay, 2. No, Bullish Trade video 3 at www.youtube.com/job3o, Bullish Trade video 3. You'll know what is a cycle point. As the price goes above the cycle point, we will project that distance that we measure here to the upside. That's our ultimate target level. Doesn't mean that the price will definitely hit the target. As you can see, this stock Seagate is approaching that target zone now, okay, in a zone of a 5362. All right. If you hit that level, a lot of traders will be willing to take some profits, and for day trading purposes, we can look for opportunity to take advantage of that, okay, by selling a little bit. Okay, doesn't mean that the stock is bearish, but we may decide for day trading purposes. All right. So this is the ultimate target. All right. But as the price going up, traders also will use Fibonacci extension. Apart from the tips that I show you now, a lot of Fibonacci traders will be watching different levels. Okay. 1 second, please. The extension level of the SA. So one second, please. I'll get it. This is lunchtime in London. Getting a bit hungry now, so this is not what I want to do. All right. Now you see the pressure, okay? Okay, as the price going up and it goes above the cycle point, traders are watching the level 138, 150% Fibonacci extension level, and they will be watching especially the 161% Fibonacci extension level. You can see that as the price reaches the 161% Fibonacci extension level, there was a bit of profit taking. as I explained to you, a lot of the Fibonacci traders who do not know these tips that I share with you today will start selling aggressively here at C161% Fibonacci extension level, and they get into trouble. You see, they take them out. Now, I mean, if they control their trade, okay, that's fine. But if they were stubborn, okay, now the price went back above the 161% Fibonacci retracement level. The ultimate target is the level that I show you here, which is the black horizontal line here, all right, which is, no, that's not yeah, that's correct, the black horizontal line here, 53, where are we? Yeah, 5362, that's the ultimate target level, all right? So remember the tip that I shared with you, the initial down move, okay, measure this side, and put in your chart, note it down so you do not forget. As the price approaching various Fibonacci extension level, a lot of Fibonacci traders will start challenging the price, but the ultimate target is this one. This is what the smart money is using, okay? The principle is based on the Isaac Newton theory. As it is in heaven, so it shall be, okay? On the earth, it's like action and reaction. The price went down fast, all right? Now it survived. It came out of, okay, the cycle point. The target zone is this one here, all right? So that's why we are watching at this level here. All right? This is about the formation of bullish Gartley pattern. I share with you my personal, okay, tips, valuable tips that you should keep for yourself. All right? Do not share it. Okay, now you can share that one, okay? So I hope you have learned something from the formation. To summarize, the bullish Gartley pattern will often appear at the end of a downtrend. So we want to see a down move before we see the pattern, okay? This is very important for us. What we are looking for is the letter M like this, as I draw in here. So you see here how it is clear, letter M, the blue line, you see, follow my cursor. That's the letter M with a lower high, you see, lower high. That's what we are looking for after a down move. Once we see it like this, now we start measuring. Do not go and start measuring first. See the pattern first and then start measuring, okay? So you know the pattern now, you start measuring. The key ratio, 61.8, which is the retracement of A to B in relation to SA. The SA, the psychology, which you need to understand, is a profit taking. The SA shouldn't be 100%, of the initial move to the downside, because it's a all right, profit taking, all right? They want to buy again, you see, profit taking, but they want to buy again, so we don't want to cancel the initial move, all right? The C, okay, the B to C should be between 38.2% and 61.8%, but the next key level is 78.6%, where the C to D will bring the price to 61.8, first retracement. The ultimate final point for this pattern is 78.6% of the SA. After that, we check the fundamental, and we use the TSTWSY as usual 8, a top-down trading method, to participate in the market. As we are in a trade, we must manage the trade. If the price goes above the cycle point, you can use the tips that I show you here, apart from the Fibonacci extension, okay, to dictate the ultimate target zone. If the price hits the ultimate target zone, this is excellent day trading tips, day trading setup that we can, okay, try to take advantage of. All right? If you want to know more about Fibonacci trading or Fibonacci extension or Fibonacci retracement, you need to go to www.dayprotraders.com. If you like this video, okay, share it and rate it, okay, and let us know. If you have any question, you are a TST trader, please do not hesitate to contact us, and then we will get back to you. Until the next time, enjoy yourself and be very happy. We are the TSTWSYS008 traders. This is about bullish Gartley pattern. Thank you for watching.